Welcome to our 8th episode of Behind the News with Piya, Jyoti, where in around 5 minutes we go deep, go wide and go behind a current event or topic of high interest. Today we are going to look at US economy, and the key question is if the economy is in good shape or not. Let's first start to look at dollar. Dollar has recently risen sharply up in the world market as compared to other currencies like British pound, Japanese yen and the euro. In general, dollar is strong because US economy is healthier than those of many countries. In many countries, there is recession, and here you have UK as well as Europe getting into one as well. In contrast, US economy is still growing. Dollar also being a world reserve currency, which means many central banks and financial institutions around the world hold lots of dollars to use for international transactions. This has helped dollar to continue to be strong. The latest inflation and labor market data imply that US production of goods and services remains healthy and underscores that continued economic strength might prevent Feds from cutting interest rates in 2024. The US labor market remains very strong. Workers on private non-farm payrolls earned an average of $34.69 per hour in March, up 4.1% year over year. US economic growth is projected at around 2% after inflation adjustment. Vanguard recently projected US equities to return between 3.7% to 5.7% over a 10-year period, which for emerging markets is projected to return of 6.1% to 8.1%. Overall projections for the year are continued but slow economic growth. There is a projection of slowdown on consumer spending, which was pumped up by pandemic-related excess savings. Home sales are projected to remain somewhat subdued due to high mortgage rates and lack of homes available for sale. 2024 is also an election year, so we should see some impact on macro fundamentals in the short term. Now the question is, what about the geopolitical worries? A war in Europe and rising tensions in Middle East? It can impact many things around the economy, including oil prices, but US could be segmented from them. So what about the recent surge of tech stocks, mostly driven by AI-related companies? Is that really going to change how we do things and boost productivity? We have successfully weathered the doomsday calls from some analysts around recession and around market crashes. US economy has continued to be stable and robust for many reasons and has the potential to continue doing so. There will always be ups and downs. It's not always easy to predict those ups and downs. In the long run, the forecasted averages will prevail. Always have the strategy and plan for your savings and investments. What I have found is that you always win by diversifying your portfolio and also leverage the principles of dollar cost averaging by making timely investments over a period of time. To summarize, many fundamentals have continued to be strong and trending positively for the US economy. A slowdown is forecasted, but that does not necessarily mean a bad economy. Hope you enjoyed this segment. We will keep bringing newer news topics of your interest in this vlog. Goodbye and have a great week ahead.